Hello. This video is about the version 19 case 1 where we're going to follow the standard, which is do a purchase receipt vendor bills. So we do a receipt and bill before we had a sales, delivery, and invoice. This is version 19, and a quick configuration is that in the accounting app, I'm installing United States. This workflow could work for other countries, so please do test. Then in the at the bottom there is a valuation where I choose perpetual at invoicing. It can be manual for now, averaging inventory valuation account and journal. These account though, I also create a new account called inventory interim associated to the inventory valuation account in the variation part. And this interim account is a new account that I create as a current asset type allow reconciliation. All right. Once everything is done, I have the product category set up as well, which is in product category, and you will see there's an FCO, just the name of the category for averaging and invoicing all these accounts. I can change it to cost of goods sold if you prefer. All right. Next, I have a product in this category, which you create a product, select the category, everything zeros for fine, goods, and track inventory. Now, let's start with the process. Let's do a confirmation on the product, $100 each for quantity 5. So purchase. Oh, I'm sorry. I might not have a purchase app. Sorry. Um, Feel free to skip and yeah, skip the video. I'm sorry. Great. Thank you for waiting. Now we have a purchase app. We can create a purchase order for a vendor. All right. And then we add the product, which is this one. We're buying 5, which is at 100 each. Confirm. By confirming the order, there's nothing happened. Nothing happened. No accounting, no inventory. Now we're going to receive 5 of them. The moment when you click on receive, you do not define the price or value. You only track the quantity. We receive all 5 of them. By now, there is no accounting impact, but there is an inventory impact. So let's go and take a look at our inventory reporting move analysis. Look at the list view. There is a product that says, and it is a hidden view, which is value, and remaining quantity. You'll see 500 of them. Great. Now next, in accounting, you will see that there is no journal entry. But if you said between November 20th up to December 1st, we still need some type of entry to reflect the stock, which is an optional step. If you really need it, you could go to accounting app, review, valuation, and generate the entry. By doing so, you will see that Odoo pushed the valuation 500 and interim for 500. I'm using today's date, but all these happen with the sequence. By then, you can have it happen in November 20th. Okay, so don't worry about the date for now. Now, this is done. If you look at your balance sheet right now, you can actually see the impact on the current asset here, which is 18th. So if I go back, I have to put it to because of some time differences with the database setup, the database is already an 18th, even though my today's date is still 17. But so far, so good. It's here. Now let's move on to the next step. Then you create a vendor bill, but your vendor bill is not $500 value, but 750 because each unit is 150. So let's go back and remember we're creating the bill from a purchase order. So just select uploading a bill, and then you have a bill date. And then remember your bill is using an inventory valuation account. You can choose 150 each. So here it is. If you do not create a journal entry, just look at the balance sheet right now, you will be very surprised because this number is incorrectly adding 500 and 750. So if you already create a inventory valuation generate entry after the stock move, after you receive the product, before you check the report after the bill, you still have to create an entry again, which is our step number 5. So once you have a previous step created, you have to come here and create it again. By doing so, these 500 will be offset because the actual 750 has already been impacted in the inventory valuation. By posting that, you will see that your valuation now is correct. And there's no interim because again, interim is tracking if there's any bill pending or receipt pending. Okay. So next part, we're going to make a sell. We're only selling one quantity. By doing all that, look at your inventory move analysis, knowing that the value automatically change. There is no extra line. It just adapt to 750 override here because our bill is 750. We respect the bill. If your bill is less, this will be less. Now, let's going to make a sell order and we'll sell for 250. All right, confirm. Again, confirm does nothing. Delivery track the quantity. It also does nothing on accounting, but there is impact on inventory. So inventory move analysis here, there's an impact. It doesn't show negative. It shows quantity 1 in red. So let me quickly update this. It only show in red. There is no negative. And then there is no journal entry, meaning your journal entry it's still reflecting 750 until you make an invoice. If you prefer that before the invoice date, I still want an impact, again, I can generate an entry and I have to generate an entry after the invoice. So in this case, I'm going to skip generate entry. I'm going to go back to the cells and create an invoice from here. After you do that, the moment you click on confirm, notice that not the stock interim account anymore, but using the credit on inventory valuation account and book into the cost of goods sold. In this case, our balance sheet already have the impact, which is in here. Perfect. Thank you for watching.